So I'm going to be starting up this new channel here, and the purpose of it will be is that now I'm actually going to try to like fully get into cryptocurrency now, because hindsight is kind of 2020. So several years back, I started hearing about like Bitcoin and things like that. One of the colleagues that I used to work with, he started telling me that hey, he's buying this hardware, he's putting these graphic cards and ASIC miners and things in his apartment, consuming all types of power, and he's mining for these coins. And at the time, the coins weren't really worth, they weren't worth hardly anything at the time, when you start telling me about this. And fast forward 3-4 years later, these coins are now, as you see today, like Bitcoin is almost knocking on $19,000 a coin. So like, again, like hindsight is 2020. So if I would have jumped in then and actually stuck with it, at this point in time, I would be a literal millionaire several times over if I would have just stuck with it. Given that I would have been able to resist actually selling the coins as they started skyrocketing. I'm pretty sure, knowing myself, I probably would have sold way before now. If I saw, like I say, if I did a $500 commitment or investment, and then suddenly that was worth like $20,000, I probably would have sold. I probably would have sold, but yeah. So, but now I'm going to try to I've been learning a lot more about cryptocurrency in general, and over the last couple of weeks, and actually done a couple of experiments, kind of seeing how some of this stuff works and how like the user experience is with a lot of different things. So one of the experiments I did is actually with Bitcoin. So I bought a really small amount of Bitcoin. Nowhere near can afford a whole Bitcoin, or even a half a Bitcoin, or even a fourth of a Bitcoin for that matter, or 1/8 of a Bitcoin. So I bought like a couple $100 of Bitcoin, and I just trying to see how it works. So I bought a small amount of Bitcoin, and then I tried to convert that Bitcoin into other currency. Tried to move it around and just kind of see how all of that works. So what I noticed when I experiment with Bitcoin is that the network seems very slow or congested, I guess you can say. So in my case, when I did a transaction, it took probably about 30-40 minutes for me to get, I guess, 2 or 3 confirmations, and then maybe almost an hour to get like 6 confirmations for my particular transaction. So that was something that was kind of unexpected, but I guess 30-40 minutes is still faster than, like, say, traditional, say, like a wire transfer. Still multiple times faster than that. But what I noticed on the blockchain in general and Bitcoin is constantly going up. It's not really dropping very much. So I took a look at the how many transactions or unconfirmed transactions there were a few days ago, and there was about 130,000 unconfirmed transaction at the time, and approximately about 200 to 300 transactions coming in every minute. And I took a look yesterday, and it was like at 160,000. So it seemed like the network is not catching up. It's just getting, the delays are getting worse and worse and worse. And this is without a whole lot of people using Bitcoin. I mean, a lot of people are using Bitcoin, but as far as the overall population of people that are doing financial transactions is a very small amount. So doesn't seem like it's very scalable, at least in its current iteration. It's not as scalable as it could be, but there's a ton of interest and ton of transactions that are occurring with Bitcoin and other cryptocurrencies right now. So you can see Bitcoin now is up to about $316 billion market cap. So that's way bigger than a lot of the like Fortune 500 companies and things that are out there. So another experiment that I did an experiment with Ethereum, pretty much the same thing. Bought a small amount of Ethereum, pretty much the same amount that I did with Bitcoin, and I tried to do a transaction with it, and it was dramatically different. So with Ethereum, I got confirmation less than a minute. So my money appeared on the other side. Everything was good in a very short period of time in comparison to the Bitcoin. So I don't know if Ethereum network is that much faster, or the way that it's designed is that much faster, or it could just be that there's that many fewer transactions occurring on the Ethereum network. I don't know enough about that at this point in time to really know what accounted for those differences, but that was definitely one huge difference that I noticed. And at the time, actually, Ethereum was less worth probably half of what this is now. So Ethereum, it looked like it's probably doubled since I did that initial experiment. I think it was around like maybe almost $350, $400, somewhere around that area. But now it's like worth knocking on $700. Man, I wish I would have kept that Ethereum. I'd have had double my money, I guess. But yeah, that's neither here or there. That's kind of the risk with some of this cryptocurrency stuff. Like you can hold it, and it may double in a day or two, and then you may hold it, and it may cut in half in a day or two. So you don't really know which way direction is going to go, because it seems like any little thing can cause the value of these things to move, and anything or nothing. It's just more people coming into the market, more people just taking profit, so it can just go all over the place at any given time. So it can be very risky. So I definitely wouldn't put any money into it that you immediately need, or that you're not willing or capable of losing. But that's something that those are kind of two experiments that I did, and kind of just to get my feet wet a little bit with Ethereum and Bitcoin. And other thing that I had realized is that there's all these other like ICO type coins that are out there. So my understanding is like these ICO coins, like at least from CoinMarketCap, that they're showing. These ones with the little star by them, you actually can't mine those coins. You actually have to go out and buy them on an exchange, as opposed to something like Bitcoin, Ethereum, Litecoin, and a lot of other these coins that don't have the like little star by them. You can buy specialized hardware, or use your GPU, CPU, things like that, and actually mine for these coins. And how that works, you're committing your CPU and GPU power to that blockchain network, and you're helping confirm and secure the transactions that are occurring on that network. And when your system provides or find a block or commit CPU to a group of systems that found the block, you get paid out in that currency for that. So you get a small amount of Bitcoin or Ethereum or Litecoin or whatever currency you're mining for that. So that's the reason why a lot of people are just in their home are like buying CPUs and GPUs, or more so GPUs and ASIC miners. When ASIC miners are those are kind of specialized equipment that pretty much are purpose built for, like, say, mining Bitcoin, or purpose built for mining Litecoin. For Ethereum, I don't believe there are any ASIC miners for Ethereum, because the way it's designed is resistance to building ASIC miners for it. So for Ethereum, you would use like a GPU, like a graphics card from like AMD or NVIDIA, to mine that coin if you wanted to get into that. Those kind of some of the things that I'm learning, and like I said, these markets are highly volatile. So when I first started looking at this, maybe a couple weeks ago, this coin Ripple, I don't even think it was in the top 10 when I started looking at it. I think it was maybe worth maybe 20 cents a coin, and here we are like a few weeks later, this coin is like almost 80 cents a coin. So it's pretty much a 4x improvement. So kind of missed the boat on that. If I like I said, I didn't really know a whole lot about this, and say if I would have bought a couple $100 of Ripple a few weeks ago, I'd have been made 4 times my money in really no time, which is crazy. But yeah, that's just kind of the things that are I'm noticing that are happening in these cryptocurrency markets. So I'm gonna try to go ahead and jump in and start trying to build something up. So I'm starting with Bitcoin, Ethereum. Had a little bit of Litecoin. Oh yeah, that's right. I did do a similar experiment with Litecoin as well, and similar like the experience I saw with Ethereum. It happened pretty quickly. It was just a Bitcoin that seemed to be significantly slower than Ethereum or Litecoin. So Right now, I actually don't have any more Litecoin. So I bought a small amount, and I saw that Litecoin, when I bought it, it was actually cheaper than even, it was probably like half of this, and it more than doubled, right? And I ended up selling it, and then it dropped back down to where it is now. But I may buy back. I may try to buy back in. If it drops back down, maybe a little bit lower than this, I may try to buy back in again, and we'll just kind of see what happened. And otherwise, but it could very well could go on another run and double from here. You just never know. But that was an interesting experiment, because like I think like mere minutes after I bought it, it almost had doubled within that hour or so. It was like really crazy how fast it went up. So I guess I bought at a good time, and I don't know if some message went out, something about Litecoin, something they're doing, or what happened, but it just dramatically jumped. Like shortly after I bought it, and like a day or two later, it was like more than double. I think it was almost triple by that time. So yeah, a lot of crazy stuff. IOTA, that's another one that I saw in the past few weeks, and this one also, it wasn't. I don't even think it was $1 at the time. I think it was less than $1, and now it's like $3.68. So again, like if that was something, this is one of those ICOs, so I would have had to outright buy that. I couldn't mine for it. But yeah, it's grown up in value like dramatically since I started tracking this. And Cardano, I don't even know what that one is. I don't think that one wasn't in the top 10 either. Dash been around. I've seen that. Don't have any Dash. Actually, don't have really any of these other ones. Monero, that's another one that I've seen some talks about. So I think the founder of McAfee, like the antivirus software, I've seen him talk up Monero quite a bit sometimes. So with Monero, apparently, my understanding is it's a completely anonymous, untraceable currency. So when you have Monero and you pay in Monero, there's no way to know like who you are, or track to who you sent stuff to, or who they sent to, who it received from. It's the way their algorithm works on their blockchain. It's supposed to be totally anonymous. So I guess if you're trying to, you don't want to reveal who you are, and you don't want to be traceable and things like that, that's probably the currency for you. But there's a lot of other ones, because I know with Bitcoin you can trace it. So you can look at any wallet that's on the blockchain. You can see how much money anybody has if you know their wallet address. But you don't know who they are necessarily, and you don't. But you can see every transaction they ever did. You can kind of read through it and kind of see everything that's ever been done to that particular wallet address. So that's something interesting that I found out about Bitcoin. I believe Ethereum is like that as well, where you can kind of see all the transactions out of the wallet. You can see how much money is in the wallet is just publicly available on the blockchain, as opposed to like a Monero, you can't see any of that information. Like if you have someone's address, or you have an address, you can't see who they sent money to. You won't know who they sent money to, who they received money from, how much money is actually in the wallet. You can't see any of that information on the Monero side. I don't know how these other ones work, but that's kind of some things I found out. Some of the other things that I'm kind of just becoming more and more aware of. So they have these, I think Bitconnect is considered one of those like high yield investment programs. So my understanding with Bitconnect, what that does is that you can invest, so you would buy Bitcoin, and you would give it to Bitconnect. You give your Bitcoin to Bitconnect, and then they will give you their Bitconnect coin in exchange. And then you can either hold their Bitconnect coin, and supposedly they're doing trading with a trading bot that's pegged to Bitcoin, right? So they're exchanging currency as Bitcoin goes up and goes down. They're trading against that, and they're making profit off of that, right? So as they make those changes, those trades against Bitcoin and with their Bitconnect token, right, the value of Bitconnect will go up or down in relationship to those trades against Bitcoin. So the pattern that I've been seeing is that a lot of time the Bitconnect chart is almost exactly the same as Bitcoin, or sometimes, I mean, there's some variance from time to time. Sometimes they were tracking that look to be pretty much the same. More recently, they've kind of diverged a little bit, but normally when Bitcoin goes up, so Bitcoin is up to 18,000, they're up 6.3% today. Take a look at Bitconnect. They're up to $443 per coin, and they're up 11%. So they're doing a little bit better than Bitcoin today. So that's one aspect of it that I know. The other thing you can do is, like, once you have the Bitconnect coin, you can actually re-lend that out to the company, right, to their so-called trading bot. So with that is that if you lend or reinvest your Bitcoin back into the bot, then they'll take that whatever amount of money that you put into them, and then they'll pay you out daily a certain percentage based on whatever profits and things they were able to make for that day. So there's a what they call their volatility software. Their volatility software will have a certain percentage pegged to it on a daily basis, and based on how much money you put in, you'll be paid out that percentage on your money every day. But that volatility software percentage changes on a day-to-day basis. Other part of it is that amount that you lend it out to the company, they hold on to that for a certain amount of time, depending on how much money you invested into the platform. So, for example, say you lend $100, for example, which I believe $100 is the minimum amount to do a loan. They'll hold on to that, I believe, for 299 days. So for 299 days, you can't get that initial $100 back. But any interest that you're being paid out daily on top of that $100, you can take that out at any time, or you can re-lend it out and start stacking loans and stacking money. But every time you do a new loan, if it's like less than that, I think $100 to $1,000 range, they hold on to that for 299 days. And then depending on if there's more days, like, I mean, if you're doing larger loans, I think if you do like $1,010 loan, then they hold on to 239 days, so it drops down. And then I believe you do a loan like over $10,000 or something like that, they only hold on to it for 120 days. So the interesting thing that I found out about Bitconnect is that the way they're structured, I would say Bitconnect, the company itself, they're making money on the front end, the back end, and also when you take money out of their platform. So they're making money all along the chain. So when you bring in a coin, a Bitcoin, and we see that Bitcoin is growing, right? So you're relinquishing your Bitcoin to them, and then you're getting their coin, which is the Bitconnect coin. Then you're lending that same coin that you just bought from them back to them, right? And then when they pay you out, they're paying you out in US dollars, not in Bitcoin and not in Bitconnect. So they're paying you back in US dollars. However, in order for you to get your money out of Bitconnect, you actually have to convert your US dollars first into Bitconnect coin, so their coin. So you're moving your money back into their ecosystem to get your money out. And then you gotta sell your Bitconnect coin for Bitcoin, right? So it's still in their ecosystem. So again, they're making money off of that because you're trading on that. It's seems like a pretty ingenious system, and I think it probably will last for a while. But the other thing, like I said, like, you can make this daily interest and stuff like that off of it. So it's kind of interesting. Could be a pyramid scheme, maybe not. Seeing a lot of, I started trying to search on YouTube and seeing a lot of people making a lot of money off of it. We'll see how long it lasts. It seems like it's they have a strategy and a system behind what they're doing. They're not just simply like taking people money and be like, we're gone, we're closed up shop and disappearing. But they could still very well do that. but yeah, so you have to take your US dollars, send it to Bitconnect coins, and then sell the Bitconnect coins for Bitcoin. And then once you have the Bitcoin, you can send the Bitcoin out to your own external wallet that's totally outside of the Bitconnect system. So, but yeah, that's kind of what I've seen with Bitconnect. So I'm conducting an experiment with that now, small amount. Actually made a little bit money back already, but I haven't taken that money out of the ecosystem. So I decided to just go ahead and try this reinvestment stuff with them for a little while. But I'm really thinking once I get up to my principal, even before my 299 days, that they're going to hold on to my initial investment. Since I did way less than $1,000 investment, nowhere near 10,000. I did like $100, $150 actually investment, and I'm going to just kind of see what happens. But once I get enough interest to cover the money I initially put in, I probably will go ahead and take that out. So I'll have recouped my initial investment, and if say a Bitconnect turns out to be a pyramid scheme or something like that, and they totally shut up shop one day, I've already removed, I eliminated my risks. I've already recouped 100% of my investment, and any other thing I get outside of that, it's pretty much profit. It's pure profit after that. So yeah, so that's another thing that I'm gonna be trying out. So yeah, like I said, I'm gonna be trying out a lot of different things, and moving things around and just kind of seeing how some of this stuff works, and like I said, get my feet wet in a lot of this new cryptocurrency world. But well, it's not really new. So like I said, it's new, being newer in the mainstream. I've been aware of it for like several years, but wish I would have stuck with it years ago. So other thing I'm doing, started doing, mining. I'm gonna be not mining Ethereum. So I have several like gaming PCs that have pretty good graphics cards. So, and I can repurpose them when I'm not using them to mine Ethereum for me. So that should be interesting. So as opposed to me going like to exchange and buying Ethereum, I'm going to just try the mining route for now. But the thing, like I noticed, like say if I when Ethereum was like half the price of this, as opposed to mining at that time, if I would have just say bought several Ethereum coins, I would have just doubled my money in like a couple days, as opposed to like mining. It may take me a month or more to get a single coin. But the hope is that the electricity I'm burning for this with the hardware, because these hardware, when they're running 24/7, it consumes a lot of electricity. I've already seen the impact in my electricity bill since doing this for like a month or a couple months. I've already seen like a significant impact in my electricity bill. So that's another thing. If you try to go the mining route, you can it consumes a lot of electricity. So that's something to be aware of. And the hardware is not cheap. Graphic cards prices have skyrocketed due to a lot of mining. Because traditionally, like graphics cards is for like PC gamers. They'll buy them so they can play the best games at the highest resolution with the best graphics. But it turns out these graphics cards are also good for mining these coins to actually get an income, pretty much a passive income by using this hardware to do things for you in the background. So that's pretty cool. So we'll see where it goes. The plan would be I'll probably post additional videos as time go on, and let you know how things are going. As I mentioned, I'm doing some stuff with Bitcoin, a little bit with Ethereum. Have my eye on a Ripple. I need to figure out. Probably need to get an exchange account somewhere. I currently don't have like a trading account where I can actually go and buy some of these coins. Because right now this is only worth 76 cents per coin. And I know when I looked at it, like I said, originally it was like 20 cents per coin. So if I would have bought it back then, I would stand and made a pretty good profit, like a 3x factor whatever money I would have been put into it. Maybe if this drops back down a little bit, I may entertain trying to acquire a little bit of Ripple. And maybe like if I if I find a coin on Ethereum, maybe I'll use that money from Ethereum to buy some Ripple, as opposed to using my own money. So that'll be the plan, is that if I gain enough money in one of these other currencies from like mining, or the value of one of them appreciate enough, I may take some of that gain and feed it into another coin, and kind of see what I can do with that. So yeah, this is kind of introduction, and I'll guess we'll see you in the next one. And like and subscribe if you like the video, and I guess join me on the journey if it's interesting to you. And yeah, I'll probably go ahead and post a Bitconnect, maybe a Bitconnect link, some links to some information about Ethereum and Bitcoin. I'm not doing anything with Bitcoin Cash or Bitcoin Gold. Just only right now, just focus on Bitcoin, Ethereum. Want to jump back in, like I said, jump back into Litecoin if it drops in price some more, because it's kind of hard to buy it if you got it so much cheaper, and now you see it at this price. Because right now, if I had held it instead of selling it, I'd have been way down from where I sold it at. So I'm actually glad I sold what I have. But a lot of these coins, they'll go down, go up, go down, go up. So like Bitcoin, if it had it like when it's 10,000 and you sold it back then, you'd probably be kicking yourself. And that could turn out to be the case for Litecoin at some point in time, that I sold the little bit of Litecoin that I actually had, because I was able to pretty much profit from it a little bit pretty quickly, within like 2-3 days, if that. Like, well, literally within the hour of me buying it, I was significantly profitable. And then I held it for a little while longer, and it was even more profitable. And then it started to look like it was kind of going to go back down, so I ended up selling it. But yeah, as I learn more about some of these other coins, may have other videos talking about it. Maybe show a video of showing how a little bit more how Ethereum works, or not so much how it works, but how to get an Ethereum wallet, get a Bitcoin wallet. Oh, that's the other interesting thing that I noticed. So in an Ethereum wallet that I have, I noticed that other stuff started showing up in it, and I didn't do anything to it. So apparently, I think what's happening in the background. So Ethereum, as you can see, is the #2 coin. However, a lot of these ICO coins are, I guess, they're tokens running underneath the Ethereum network. So that was an interesting thing that I kind of found out. A lot of these other coins that we're seeing here, a lot of them are actually powered by Ethereum, which is wasn't obvious to me. I thought they were kind of their own independent, totally different thing, which I guess technically they are. But Ethereum supposedly, I guess they're not even supposedly, they do expose some type of underlying development platform of some type, where these other coins can be built underneath it, or tokens can be issued underneath it. So seeing that being a possibility for this, I think Ethereum probably has a lot of potential, as far as like to be a main platform, because like Bitcoin may be the underlying value base for all the other cryptocurrencies, but as far as usable everyday type transactions, I think Bitcoin may not be the best, at least from my little experiment with it, because the time for the transaction to occur was very slow in comparison to some of the other blockchains, and the fees were very high. That's the other thing I hadn't mentioned. The fees, when I like transferred Bitcoin, tried to move it around, or do anything like that, the fees that get paid back out to the network, and then also to whichever exchange or that you may be using or signed up on, those fees can be significant. So essentially, depending on how much profit your coin has accumulated, you could potentially lose all of that if it's like a small amount, like less than $100 or $20 or $30 or something like that. You could potentially lose 100% of that just trying to get the money out of Bitcoin. So say if you're moving it from Bitcoin into, say you're moving from a Bitcoin wallet into like Coinbase, and then you're trying to go from Coinbase into your personal wallet, your like say your real bank, your traditional bank with US dollars, those transfer fees can add up. You could have pretty much, like I said, lost all of your profit just in doing those conversions. So that's something I kind of realized as I was playing with some of this stuff. But if you're making like double your money, then it's not a big deal. I mean, any conversion is not going to eat that. It's not going to eat up that much money. So you may spend like $10-$20 maybe, just depending on how much money you're moving, and how busy the blockchain is. So I believe as the blockchain get more and more busy, the fees has potential to go up by the algorithm, or you may have to send a bigger fee, so the miners that are verifying the transactions will actually pick up your transaction and roll it up into a block, and all the stuff that happens on the blockchain. Otherwise, your transaction could be sitting or waiting for potentially hours, days. I don't know how bad it can get, but I just kind of reading around, I've seen some people saying, hey, we've been waiting for this small transaction I was trying to do. It's been sitting on the blockchain for like 2 days. Like, what's the deal? I haven't got my money yet. So that's something to be aware of, especially on the Bitcoin front. So yeah, I keep on talking like I'm about to end this video, and then I start talking about something else. I get reminded of something else. So yeah, I guess we'll see you in the next one. Like and subscribe if you like the video, and see you next time.